Today, I want to talk about how when Bank of America collapses, it will destroy Citadel. I want to explain why BofA is in trouble and how Citadel is entwined. So stay tuned and let's make some money. So let's dive straight in with the key information. So I want to talk about this today because, as you will have seen a couple of days ago, Bank of America went down and customers were reporting zero balances across all of their accounts. Now, obviously, that's not the reason why Bank of America is collapsing, so let's talk about some of the reasons why they're in trouble and who knows it. So firstly, Bank of America is one of those banks that is currently suffering hundreds of billions of dollars worth of unrealized losses. And actually, Bank of America is leading the pack with over $100 billion in just their losses. These are unrealized losses on loans that they've effectively given out that they likely won't receive back. That's because many of those loans went to commercial real estate companies that are now facing financial difficulties, and effectively they're just losing money elsewhere because they gave those loans out at such low interest rates. And as time goes by, more and more of these unrealized losses turn to realized losses, and Bank of America and all of these other banks are losing more and more money and also seeing an increased expenditure versus a decreased revenue based on that opportunity cost. And someone that knows that and knows all about it is Warren Buffett and Berkshire Hathaway. And we can see that since the 16th of August and likely before then as well, Warren Buffett has been absolutely dumping his shareholdings in Bank of America. You can see pretty much every few days, Berkshire Hathaway, aka Warren Buffett, is selling 3.7 million shares or $150 million worth, 5 million shares, another 5 million, 6.7 million, 11 million shares, 6, 7, 7, 5, 8 million shares, pretty much every few days. We can see all through August and all through September, Warren Buffett has been dumping these shares, and actually it's been getting even worse now into October. As of the 19th of September, Berkshire Hathaway, aka Warren Buffett, had 22 million shares of Bank of America left. A few days later, that fell to 21 million. By the 27th of September, just 11 million, and now just 8.5 million shares. Just half a month ago, Warren Buffett had nearly $900 million in Bank of America and now has just $300 million, nearly a 66% drop. Warren Buffett in total has now sold over $2 billion worth of Bank of America. So clearly, Bank of America is in trouble and Warren Buffett knows about it. But how are Bank of America and Citadel so entwined? Well, we can see Fidel Cashflow has tweeted saying that Buffett knows that Bank of America's prime brokerage holds 95.65% of Citadel's derivative liabilities on their balance sheets. He also knows that Citadel isn't the only hedge fund that's been granted gross egregious amounts of leverage as well. Many of these hedge funds have 5, 10, 15, 20, even 100 times leverage on their cash. In the last few years, Citadel has increased their total gross derivative contracts on a balance sheet from just over 300 billion now to over 600 billion. Bank of America serves as the clearing and prime broker for 95.65% of Citadel's net derivative assets, which basically means that when Citadel needs to be margin called, Bank of America will be doing the margin calling. But let's remember what happened when Archegos Capital Management had to be margin called. Well, many of those banks that did the margin calling, like Credit Suisse, suffered massively as a result of that margin call, losing $5 to $10 billion. And remember, Archegos only had around $30 billion, and these banks like Credit Suisse lost $5 to $10 billion. Imagine what will happen when Citadel needs $600 billion margin called. Bank of America could face losses towards $50, even $100 billion, especially as they do pretty much all of the clearing services. These clearing services aren't split 20%, 20%, 20% between Goldman Sachs, UBS, Credit Suisse, Nomura, and many other banks. It's 95% concentrated to BofA. Let's remember with Archegos, there wasn't just one bank involved. There was Credit Suisse, Nomura, UBS, but also others like Goldman Sachs, Morgan Stanley, and Deutsche Bank. Therefore, the margin and the risk was spread among a number of different banks, and therefore the losses suffered were also spread fairly evenly across all of these banks as well. It wasn't 95% concentrated to just one bank. I also wanted to go through the overnight trade we had in the Millionaire Mindset Trading Group on EONR. This shows you don't have to be constantly active every single day to take profitable trades. Some of the trades do happen in 5 or 10 minutes, but some take hours, if not days, to play out. You can see I told the group that I was waiting for the breakout of $1.73, which is where the group and I set our price alerts for, ready to buy the stock in the event of a breakout. At the market close and in the after hours, EONR got that breakout and then through the next morning ran all the way to $2.68 per share for a 55% overnight gain. So guys, if you want these kind of overnight 55% gains where you don't have to be paying attention 24/7, be sure to join the Millionaire Mindset Trading Group using the link in the description below. And what's potentially even more worrying is the fact that the Simpsons actually predicted a Bank of America collapse years ago. Now you might be saying, hang on Tom, are you really making stock making decisions or AMC squeeze predictions based off of a cartoon show? But actually, if you didn't already know, The Simpsons has actually predicted the future successfully tons and tons of times. Once or twice you might think it's a lucky fluke, but 34 times in a row is just getting ridiculous. Based on The Simpsons' track record for predictions actually coming true, it wouldn't surprise me if a Bank of America collapse is just around the corner.
What do you mean the bank is out of money?
Insolvent? You only have enough cash for the next 3 customers! Hey, what's this? Just a second here. No, I don't have your money here. It's in Bill's house and Fred's house.
Hey, what the hell you doing with my money in your house, Fred?
Obviously that video is just a bit of comedy, but it really wouldn't surprise me based on how Bank of America have such massive losses and how Warren Buffett has been selling hundreds of millions and billions of dollars of their stock if Bank of America really is in trouble. Especially as EJ Anthony tweeted saying this isn't a meme stock, failed regional bank stock, or even some rubbish crypto coin, it's the losses currently being suffered at the Fed. You can see for years, all the way since 2011 to 2020, 2021 and 2022, the Fed managed to maintain a net positive balance of profits to losses. The Fed had always been ever so slightly net profitable, but over the last 2 years has lost hundreds of billions of dollars. He said the Fed losses have now just passed $200 billion, which means the literal people with the money printer figured out how to lose money. This is primarily a result of debt levels absolutely skyrocketing over the last couple of years with increased interest rates. Meaning instead of remaining just profitable, the Fed is now massively loss-making. And ChatGPT has actually calculated and predicted that based on current trends, insolvency risks could materialise across the US by 2030 to 2035. And it said that a tipping point would occur when debt servicing costs rise to unsustainable levels, or around 15% of GDP, leading to widespread defaults or restructuring efforts. This is absolutely crazy that the US as a country could end up defaulting on its debt as soon as the next few years. And in that event, the Fed would not be able to come to the aid of any collapsed bank like Bank of America. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.